You remember last time, just for a bit of a recap, last time we looked at some new functions. We talked about, I think it was the choose function. We talked about ifs and average ifs. Just quickly running through this, we said and use the count ifs and sum ifs to do some conditional calculations. The average ifs third question. Okay, that's good feedback. So I'll have a look at that quickly. But just for the sake of, I can see Lazy, I'm not sure you were there last time, but what we looked at was this functions, count ifs. So we said it works a bit like the count if function, except that you're able to add multiple criteria and multiple ranges. So like in this case, it asks us to count the number of female students. So that's our criteria. We just follow this wizard here. So it says we want criteria range, and this is where we will get the information from. So we select that range, and what is our criteria? We are looking for our students. So we have said you must type it in the same case. It appears. Okay, so it tells us these are 183 females who completed a test prep. Let's quickly run through this again. Count ifs. Count ifs. Bracket. So we will be using two fields there. So let's use the gender one first. And the criteria for the gender is females again. And then we can put the second criteria range. If we go to the question, it says who completed a test prep. So the field that shows us who completed is this one. We can select that. And then the criteria for that is completed. Also remember to put the speech marks, all right? So that's okay. Then you can quickly, that you get the hang of it. I don't want to go through all of them. Let's just do two of some ifs, because this is not the main focus for today. Some ifs, and open a bracket, I didn't need to read the question. Total reading points scored by students who received standard lunch. So we have want total reading points scored by students who received standard lunch. We want to get students who received standard lunch, and where do we get that from? We look for lunch, select that. The criteria for that is standard. Then the sum range. Okay, we have done it the other way around. This one starts with the sum range. Sum range is it reading? Reading points. So we'll go to reading. Get that from up here. Of course, the cover after that. So we have followed this. This is sum range. This is a criteria range. There's then standard. Press enter. Let's see, total reading points scored by students who received standard. That should be correct. So we have sum range, criteria range, and criteria range 1. That's correct. Let's try the second one. Total reading points scored by students who did not receive standard lunch. That means other students. So we can still use some ifs. Then the sum range is still reading points. So we go to reading points. Take this to the top, reading points. Then criteria range. is the same criteria range for lunch. So there are only two options. There is free or reduced. So the criteria for this will be free stroke reduced, just the way it appears on the worksheet. I should get some number there. Although you realize you can also get this number by subtracting from the total number. So when I look at the data there, those are the only two options. So those are two for that. Let's try average ifs. Okay, let's see, not using a pivot table. Show the average total score for each parental education level. Let me look at that data again. Parental education level. So this requires you to use a subtotal. Let's see subtotal. So we want to average, to group this data by parental education level. Let me see if we can quickly do this. Functions. There's an option for subtotals. Anyway, let me look into that, then I'll show you. What happens is you group the data, so it gives you summaries for each section. So it would group each, it would have groups of data based on the parental education level, which I think is this one here. So all this high school people would be clustered together. Some high school people would be clustered together. Then for each of those subtotals, for each of those sections, it will give you what we call a subtotal. And the subtotal would be, you choose what that subtotal would be, either the total marks or the count of people in that. So it will give you some calculation based on the groups, right? So it should be a subtotals function, which I'm not seeing here. All right, I'll double check that and advise by the end of this. So that's, if I can quickly go through these two for the benefit of the person who was not here last time. So average if was average use. Want here average math score for female students who completed a test. So it's basically like the same one we did up there. Average math score. So we do the average range is the math score. Then comma criteria range for students who did not do what, who completed a test prep course. So that should be, this is the criteria range. That's the criteria range. The first criteria should be those who completed. All right, so then of course we said you can reduce the decimals and increase them using this. Then let me see, average score by student not in ethnic group A and whose parents have a master's degree. So in all other ethnic groups except for A, and whose parents have a master's degree. Let's see how that will look like. So that would be average use, bracket, and the average range. It is the average total score. So total score is here. Then criteria range 1 should be ethnic groups. Then criteria range, the criteria is try this. Let's see, this should be, you can do group A, or not group A, rather is what we're looking for. So it should be all other groups. There's a group D, group. All right. I could do some calculation here. Let me see. So if I want to get the average for the people not in group A, that means I'm excluding group A. So let's try this first of all. Let's just try this first. Let me put group. It should be a more efficient way of doing this. Group C. Then I can use the same criteria range to select the same group. Right, this should be group B, then group C. Criteria range 2, same criteria range. And this time I select criteria 2 would be C, and so forth. So I can repeat the same thing for all groups. I suspect there's a more efficient way of doing this. I do not think you have to repeat this every time. It looks like we are we're making reference to the same criteria over and over. So if I'm doing that, I can just copy this. And just change. So change this to group D. And I would have to do that for all of them. So I have data, just checking this if this is correct. So that's the average range. This is the criteria range. This is criteria range 2, the criteria range 3. It should be criteria range 3. So it should match this. Just copy this again. Paste that and change this to group D. Should be correct now. Then I have the last one. Paste that and change that to group E. Then I can do the last criteria, which was whose parents have a master's. So that would be the new criteria range. Would be it's a new criteria range. Which, because I'm looking for a criteria range, and it is this one. Not the criteria is masters. It is telling me something about group D. All right, let me go through this again so we don't take too much time on it. I think there should be a more efficient way of doing this that does not require us to do all the formula. So I'll go through that, and it's the first thing I will look at when we get back on Monday. But today I had wanted us to focus on the PMT and the IPMT formula. Then from there we can, in the next session, I can do this present value and net present value. But let's talk about PMT. It's a pretty straightforward concept. So if you look at my screen here, I've started by explaining what PMT is. It is short for payment, okay? And it is a financial function commonly used to calculate the regular payment amounts required for loans, mortgages, or any other financial agreement involving periodic payments. It helps individuals and businesses determine how much they need to pay for each period. So think of it like when someone takes a loan, there are some monthly payments. Usually they will be monthly, but in other cases, so there could be cases where somebody is supposed to pay every 6 months, but generally it could be, most loans you'll be expected to pay some amount at the end of every month. Okay. There are certain other payments where which we'll discuss, where you're supposed to make a payment at the beginning of every period. That period could be a month or the beginning of the year. But usually, most payments are due at the end of some period. So that is a description of what it is. So in other words, if you have a mortgage, you're supposed to pay for, let's say, 10 years. What this PMT function helps you do is compute how much you're supposed to pay every month for that 10-year period, taking into account the interest and so forth. Okay, so I'd gone ahead and done some calculations here, but I'll repeat them just to illustrate how it works. So this is a PMT function. So if I can use the same, let me just calculate here, monthly payment. So this is the same amount here, but I'll go step by step. So equals, then of course I'll start with PMT, it's an Excel function. So the rate, this is the interest rate. So in this case, the interest rate is 6.57, but the thing to note, like in this case, this is the annual interest rate. You need to turn that into the monthly interest rate. And you can guess that you'll do that by dividing this by 12 to give you how much the interest rate for every month. So we are done with the interest. Okay, the rate. Then there is this NPR. It is a number of payment periods. Okay. So I think I did not take a new here through what I'm calling components of the PMT function. So the first one is the interest rate, is a percentage charge on the loan amount, which affects how much you pay in total. So this percentage, for most loans, it will be quoted per annum. So you need to convert that to the monthly rate. Then the number of payments. This is the total number of payment periods for which the loan will be repaid. Okay. Now, when we talk of payment periods, it depends on how many times you're expected to pay. Like in this case, the loan will be repaid. There's an amount that will be repaid every month. Okay. So when we say this here, if you look at this column, it is the length of the loan in years. This one here. So if we pick that, it is not accurate in terms of the number of payment periods. This is the number of payment years, but because we are paying every month, we need to multiply this by 12 to show the number of months over which we will be repaying the loan. Okay, I hope this makes sense. Okay, so the multiplication by 12 is because we will be paying 12 times every year. So it is 12 times every year for these 35 years. Then present value, PV, it is the total amount of the loan, like the current value of that loan. In this case, the loan amount was this. Excuse me. Then there is some optional, they're called arguments here, like this future value and type. type here refers to whether you're paying at the beginning of the month or at the end of the month. And we have said for most cases, you pay at the end of the month. So we will not enter anything for that section. And future value, it is an optional component representing the desired cash balance after the last payment is made. We do not want to have any balance at the end of the period. So we will leave it at 0 in this case. There are instances where we will put some numbers there, but it's a calculation for another day. So if you look at this, we get our figure. This matches what I have there. So it's a pretty straightforward concept. We know for us to pay this over 35, or rather over 35 years, we will need to pay, although here I'm indicating it in, I think the currency has changed to Kenya shillings. Let me just return it here to dollars for consistency. And usually you'll notice it shows a negative value because it is money that is going out. So in the context of the person paying, it is an outflow. It goes, it is money that they're giving away. So it is why it is regarded as negative, right? It is not income, it is some expenditure. So the same would apply for all these other calculations. So if you look at this, I've followed the same procedure just to quickly run through it again. PMT is short for payment. So we say we start with the rate. We have to convert it to the monthly rate by dividing by 12. So again, we are making the assumption that for most loans, you're supposed to repay every month. If it was a loan where you're supposed to pay some amount every quarter, then this would change. This would be the payment period, or rather the rate would be, you would have to divide this by 4 if you are paying every quarter. And the payment periods would change. This would also be every quarter if you are paying quarterly. Yeah, if that makes sense. So that would impact the amount of you're supposed to pay every quarter. If you look at it, it's a bit of a larger amount, right? So I hope this is clear. Let's try IPMT. IPMT is also a pretty straightforward concept, and it's what I have put here. IPMT looks almost similar, almost the same, but it is the thing with IPMT. The difference is IPMT is for calculating out of this amount that you're paying, which how much of it will be the interest. Okay, so you'll be paying this much, but the interest out of that, this will be the interest. Okay, let me use this other worksheet to calculate that. So I'd also, it looks like I'd also done some calculations here. So we have a loan amount. I'm assuming this is dollars. So we have a loan amount, and the interest rate is 6, and the number of payments is 12. This is over 1 year. Okay, so you're paying this amount over 1 year. So monthly payments, this one we have calculated using the PMT function, which we have just worked out. So PMT, we said it has rate. So you have 6% every month. Then you have number of payments. In this case, it will just be 12. Then we have this value, the current value, center. It gives us the amount that was there. So which is the same calculation that has been done. But the question is, out of this 21,516, how much of it is the interest? That is where this IPMT function comes. If you look at it, it looks almost the same. You look at the arguments, the parameters that go into it, they're almost the same, except for one here, which we call the period. Okay, so we have the rate, the period, the number of periods, then the current value, right? So let's try working it out here one step at a time. So we start with IPMT. Okay, so it's interest payment. So the rate in this case is that, and divide it by 12. Remember to divide it by 12 because there will be, that's the monthly rate. The period, so it is for each period. In this case, the current period is this, the first payment. So the period is referring to, if it is, if you think about the previous example where we talked about somebody paying a loan or a mortgage for over 35 years. So the period being referred to here is each of those payments, each of the 35 times 12 payments. So each of the monthly payment is what we will be calling the period. So then the number of periods, again, in this case is 12, right? Then the present value is 250. Okay. So then these other ones are optional. We will leave them out for now. And if we do that, we'll get the answer. Again, my system wants to work in Kenya shillings. Let me just check it back. Then, if you recall from our other discussions, if I do this, I'll get some errors. And if you remember from our earlier discussion, that error is coming because our cell references are changing. If I look at this, the rate was on E7. If I look here, the rate has gone to E8, which is clearly wrong. If I look here, it probably would have gone to E9 and so forth. So if you recall from our first lesson, when I want this to remain on that, we will use absolute reference. So I've done function F4 because I'm using a laptop. Function F4 to lock that on 6%. So it will just add those dollar signs around the E. Another field I want to lock is the payment, the period, this period. I want this to change as I go down. So the period should change to 2, 3, 4, and so forth. But the number of payments, because I'm reading this from here, I'm getting this directly from this block of values. I want that to be fixed. So let's see. This is changing. This is changing. I want E8, this figure, to remain fixed. So I'll do function F4. And the loan amount also should remain fixed. Then I do function F4 and I press enter. Then it will work as it should. Yes, it is working, right? So remember, those absolute references, very, very critical. If you forget this, it ends up being a bit disastrous because it will not work out the correct values for the rest of the out of field range. So we have fixed this on 6% because we don't want that to change. We have left this open. It's called relative reference because we want that to change. And we have fixed the number of payment periods because we wanted to just refer to these 12. Otherwise, if we wanted it to remain fixed as well, we could type the 12 here to still do the same thing. But as we agreed not to type in numbers inside the formula unless it is absolutely necessary. If I type the 12 there, it would still give me the same answers. But because we have saved, our convention is not to type this here. We click on it, and then we do function F4. Then of course the payment, the loan amount should also remain fixed. Okay, so out of each of these, this is the amount the person will be paying per month, and out of this is the 1,250 will be the interest. Okay, so by the end of that time, they will have paid 2,500 and rather 2,258,000 And out of that, 8,199 will be the interest. So if you look at it, it kind of makes a lot of sense. The original amount is 250. The amount they will be repaying will be 258, 199.29. So if you take this amount and subtract that, it should just give you that interest, the amount of interest, right? So I hope this makes sense. So it starts getting a bit more technical when we start doing financial functions, because you kind of need to understand the theory behind it. Otherwise, it won't make much sense. But these are easy enough to understand. You take a loan of this amount, you want to pay over a 12-month period, then you need to pay 21,516 every month. If I change this, let's say I want to pay this, instead of having the number of payments, I have like the number of years when I want to, so let's say years instead. I want to pay this over 3 years. Let's say this was, okay. That will affect everything, because when we make this 3, then we need to make this, it is no longer a month, so we need to multiply this by 12 for it to be really to represent the correct number of payment periods, rather the correct number of payments, right? So we have adjusted this to 3 years. Let me see how that affects this as well. This also should be affected, so that should be times 3 as well, times 12. Okay, let's see what else will change. So 6% per annum. I'm trying to see, I'll just change this to years. So I want to see whether it makes sense. So we have the rate, that's correct. The number of payments will be 3 times 12, and the current value will be the same. So I'll be paying, then this will change. This will change here. See, this one is 12. I was wondering why this is 91. Then I would have to increase this to go all the way to cover 3. Within the first year, you'll have paid 91. But if I want to represent the 3 years, this needs to go all the way to 36. Then you would get the correct answer. So let me have that as 36. Then I would need to copy this down all the way. And I can do my sum here, equals bracket. Then I would do sum rows. Then it should give me that amount. And then I can do the same here. Copy this formula down. And start from up here. And if I get the sum, okay, so I can see it still makes sense, because 273, if I pay this over 3 years, of course I'll pay a larger amount of money. I'll pay 273 in total. And out of that 273,000, 23,797 will be interest. So of course, because I paid for a longer period of time, I will pay more money. And if you look at the numbers, they add up. I started with 250, I have paid 273. So that includes an interest of 3,000, right? I hope it's all making sense. So what I want to do is not to overwhelm you with too much information. So today we have looked at 2 functions. Okay, if I can go back to where I had my notes. PMT, it is short for payment. It is a function that is common. It's used to calculate regular payment amounts required for, it could be loans, it could be mortgages, or any financial agreement involving periodic payment. So that periodic payment is an important statement because it is not necessarily all the time. It is common for you to pay every month, but there could be instances where you pay every quarter. So you need to keep that in mind when you're doing the calculation. So it helps individuals or businesses to determine how much they need to pay for every period. So, for example, monthly, it could be quarterly, or whichever payment period you would have agreed with the lender or whatever we are talking about in this case. So PMT calculates the monthly payment. IPMT calculates what the interest is out of that monthly payment. Okay, so if we use the IPMT in this, just as a conclusion, IPMT formula in this case, we said it still includes rate. We divide that by 12 because there will be to get a monthly interest rate. And in this case, they were paying over 35. No, we would need to get the period. Like in this case, it would be period 1, period 2, and so forth. Okay, so if the period was period 1, meaning like the first payment, then the number of payments here would be times 12. It's 11 times 12, then the present value would be this. So the first amount you pay for interest will be this. For me to get the second amount, I would need to change this to 2. Then it will change as I go. By the time I finish the 35 years, this should be, like at the end of the first year, this should be 12th payment. At the end of the second year, this number will be 24, and so forth. So you'll see how the interest is reducing over a period of time. Right? So I hope that is clear.